Good morning, everyone. Good morning. Hope you guys are well. Hope you guys are well. Wow. Look at Bitcoin. Still pumping. We're still pumping. Nearly breaking the previous weekly high. Hope you guys are doing well. Welcome to the stream. We're going to be delving into a bit of everything this morning, including crypto. What else have we got in our list today? Reading the Financial Times, reading Forex Factory, looking at a bit of economics, and yeah, we'll start there. Let me just have a look here. So yeah, I've decided to come back to streets because I want to basically learn. Basically, what I was going to do is going to learn a little bit more about finance as a whole. In the past 6 months or so, I've been understanding it more in terms of where to invest. I've done a bit of investing myself, but I want to know a bit more about it in terms of the whole scope of things. And I was thinking, well, what's the point of doing it by myself when I could do it with some people on here? So, and yeah, so what I've kind of done is, if I go to my Google Drive, yeah. So I've made like a new thing for all of my little areas. So for example, crypto, real estate, forex, finance, investing, economics. And when we find some piece of information, I'll add it to whatever one it is. And as time goes on, we'll have quite a big bank of stuff. So people can learn later on and they can go back to what we do. But yeah, if we learn anything in the day, we'll whack that on the sheet, and we'll continue. So yeah, looks like Trump's inauguration was it yesterday? Yeah, and this is why you're seeing the crypto market starting to push, because Trump is in it. What's that actually Trump coin doing? It's wild how a president is allowed to do that. Is he involved in it as such, or is he yeah, look, it's still pretty high. So obviously we haven't looked at the charts for a while. I'm just going to sit back and have a little bit of a breather and look and see what's happened. So currently, obviously, we're pretty high on gold, right? Goldie's getting back to the all-time highs again, which is interesting. Now, what I find interesting is the fact that Bitcoin is also getting to its all-time high. So the first thing that I want to ask today, which I'm probably going to ask ChatGPT, is why is gold price so high currently, but also Bitcoin? Because what I previously thought before was the fact that when gold is high, okay, it's normally that the markets are struggling as such, and therefore people are putting their money into safe havens to basically hedge the risk. And normally when that is the case, Bitcoin has a little bit of a struggle because markets aren't doing well. But what is different is that the markets are doing well. Okay, if we go to the S&P, oh my god, look at this. If we go to the S&P, can I find a better one than that? There we go. We are also very, very high. This is the futures, but yes, so same thing. So it just looks at the moment a little bit odd for me. Why are we bullish on everything? Now, obviously, I think Trump's reassigning of president is going to help the situation because he's a very strong candidate for for someone to push things. But it's just economically, it seems a little bit bizarre. 1 second, where's my thing? His celebration was tonight. It's tomorrow. Okay. So a little bit early. So yeah, this is interesting. Holiday and fall kick off more with the service at St. John's from the White House. And it looks like is TikTok back? Is he already? Cause I haven't seen that. It's already back. Restores the services already. Wow. Well, I knew that was gonna happen. So I think the first thing that I want to do is focus on the UK because I think it's a really good example of where to start. But first things first, let's just mark our charts up, see what everyone else is thinking on GJ and Gold. Again, I am not trading because I'm currently looking at a new what's it called? A strategy that I'm going to keep in the bank and just do myself because it doesn't take much time. I can have it on a separate window. But let's just see for this day what we're going to be looking at just to help everyone out. Maybe retails is pushing the price and the rich are selling risky assets and buying gold. Yeah, but the risky assets is normally the stocks and shares. But the stocks and shares are flying, so that is my only issue. Alright, are we back now? So we'll do Goldie first. So Goldie in the daily time frame, we can see that we are currently in quite a large range, right? I think we'll all agree that we're between 2,720 and the support's down here. It's like here. So this is the current range we're in on the daily. I'm still going to use my yellow lines because I still quite like using them. Obviously, in recent times, we've been quite bullish. This daily candle has already made its low wick and coming to the upside. And this, obviously, if we start to break above 2,720, you'd expect us to come to the next resistance, which is 2,748. But with that in mind, you'll have to wait for, obviously, the breaks. Let's take a look on the 4 hour. Yeah, so we did actually reject here. What time is that at? 6 o'clock at the end of Thursday. Already made some key support down here, which makes sense because if you look to the left hand side, we did this before here. So realistically now, I mean, let's get into the hourly and the 30 minutes. I think the only thing that you'd probably want here, if you're looking for buys on gold, is a bit of a retracement, probably down to here, right? Even though we've kind of already had the wick here, to be fair. 6 o'clock we pushed, clean candles left hand side, back to previous resistance / support, which is here. If gold is wanting to expect to continue up, then potentially you would get to this level here, 2,716. But you'd want to see us really retesting probably here, seeing how we react to here. But for the most part, yeah, I think Goldie should continue here. We've made the low, we should continue to the high, 2,720. At the moment though, you just got to kind of wait for some pullbacks here. Pretty simple on Goldie. Which is not bad. Let me put a little thing on. Doo-doo-doo. Let me just share this. But yeah, I hope you guys have been well, man. It's been time. Been working on myself, as I said before. I've been absolutely caning at the gym for the past year and a half. But it's been fun. I've been really, really enjoying it. And as I said, I'm not bothered about being on the charts all day. I think for me it was really bad in terms of my mental health, but also just in terms of learning. There wasn't much learning going on. Growing as a person. This candle already is quite nice in the 30-minute, making a lower wick, which is nice. If it comes back down to 709, that'll be quite a nice buy. Stop loss below 703. That's probably where I'd look to take a little buy. Let's take a look at the Forex Factory for today. So today, oh, it's actually US bank holiday. Interesting. Is that because of the inauguration? And it's Martin Luther King's Day. Very interesting. Let's take a look at GJ. How is actually the pound doing in terms of the Japanese yen? So what I'll also probably do with the finance time is looking at Asian markets as well. I probably want to do the whole scope of everything, just so we've got the broader thing. So first thing, so what I'm going to be doing is, as time goes on, I want to be able to read an article and know exactly what's going on. So first of all, here you can see this is Donald Trump unlikely to impose trade tariffs on the UK. So I think the first thing that I want to do is look at what is a trade tariff. Trade tariff is much more to do with economics. I think it's half day close at noon. Oh, a half day. Now the good thing that everyone has, and I really want to recommend people because I use it on a daily basis, is tariffs. Is using ChatGPT. I use it all the time. ChatGPT is an absolute godsend for stuff like this. I'm pretty sure I actually searched this one yesterday. Did I? Yeah. So, in terms of tariffs, right? This means that the US will put on tariffs for the UK. Would they put on tariffs for the UK? Well, depending on how obviously Trump wants to play it, and also his bitch Elon will decide. But what it basically means is higher prices for the UK. So if someone in the US is buying from the UK, it'll cost more. So UK goods will become more expensive. Yeah, makes sense. But also, another thing would be, it makes the UK not as competitive because the UK products might lose out to cheap alternatives in the US or other countries. So I think the main thing here, what Trump is discussing, is that he is wanting, so notes. Trump is wanting, he's wanting to obviously build, because I think a lot of his, the people that vote for Trump, obviously there's a lot of rednecks, a lot of people who actually aren't that clever as such. And they're actually wanting everything to be made wanting everything to be made in the US, right? Because it means there's more jobs in the US to create more jobs and products in the US. Now it'll be interesting to see what this actually entails, because Elon is not happy with this. Elon is not happy with the tariffs because obviously he's got Tesla, and yes, fundamentally the car is built in the US. However, a lot of the parts are from China or whatever, and therefore they could put tariffs on the parts, and therefore inherently making the cars more expensive. So for example, if I go here, what percentage of a Tesla is made in US in terms of parts? Tesla vehicles along the okay. Model 3 is 87% total domestic content. These figures indicate, okay, what other countries supply the rest of the Tesla parts. So yeah, so this is the issue with tariffs. So it'll be interesting to see how he does, because you can see here there is a lot of different countries that supply a lot of the stuff. So for example, if Trump was to put a massive tariff on China, they go, right, okay, that's fine. China will then now, you know, whatever tariff it is, will put that straight on the price of lithium, and therefore things will get more expensive because they're not homegrown. That may force Tesla and other companies to make their own in their own country, but economically that's going to be a little bit hard for cost of goods. So that is interesting. Let me just look and see what else was this. So here's an example. If the US added a 20% tax on Scotch whiskey, a $50 bottle would cost $60 in the US, making it less appealing compared to alternatives. So yeah, why would Trump do this? These are the reasons, right? He's trying to be Billy Big Bollocks. Why would tariffs be beneficial to a country? So this is a good example. So protect US industries, trade leverage, and political reasons. So for example, yeah, you can maybe barter. You can maybe use it as a negotiation tool with different countries. So it's an interesting way that you could potentially play it. In this article, the UK members of Parliament are saying that he probably won't be doing this. But their relationship is pretty threatened at the moment because of the fact, obviously, Labour are in, and that doesn't make it easier. Long lithium. Yeah. So that is going to be interesting. And obviously, Starmer's going to try and make a deal with Trump, which is probably not going to be the easiest. Here along, which has set out more right-wing policies and issues such as net zero and immigration. Yeah, okay, so interesting. It's going to be an interesting one. Interesting. So here we go. Goldie's coming down. It made a top wick, looking like it's rejecting a little bit. And GGO we'll get onto in a second. So let's take a look and see. We want to look at Forex Factory. We want to look at the Financial Times a little bit more. So yeah, what I want to do is making sure that when we look at articles like this, when there's some stats in terms of economic policies, we know exactly what we're talking about, which we can do over time. Again, if you're doing this every single day, you'll get pretty stark into it, because I want to start investing in index funds, a little bit of crypto as well, but also showing where I am going to delegate it all. I've previously done it, but I want to do it a bit more sectioned. For example, in investing, the main thing is spreading the risk over a numerous amount of assets. So if we go to our other one, I'll go here. Investing. What I really want to do in investing is, when we have our money, when I have my money every single month, right? So we have income, but we've also got businesses. We've also got real estate, but that's kind of a section one. So what we want to look at is where to put it in the stocks and shares. And today we'll go through, we'll go through FTSE 100. So what is FTSE 100? And is it currently a good place to put our money in? And I want to make sure that we also understand, obviously there's different, this is UK. We've also got, let me put this here. The US, which is the S&P 500. Now, the good thing about these, which we'll go through in a second, which I know a bit about it, is the fact that you're actually buying. Let's just say today I bought, I put in £100 into FTSE 100. You are then buying the top 100 companies in the UK. But as time goes on and things change, if a new company comes into fruition and does really well and gets into the top 100 companies, that will replace one that has just dropped out of the top 100. So you always get in the top 100, which is why it's so beneficial for long-term investing, because you always get the top companies. You don't have to worry on, different companies performing well, and therefore it's less of a risk. But in terms of investing, what I'd want to do is, so these are called ETFs. These things. So ETFs, I'm looking at potentially when we get the information, probably looking at 50% to 60%. 60% of investing portfolio, because it gives you a fuller amount. But the other part is what I want to look for. So crypto, I'd want a part in, because once you have a part in everything, so let's just say crypto is 15%. I'd also say gold is probably 15, maybe 10%. Hey, darling. Thank you. But once we get the data on here, we'll I'll start making my percentages proper. And then obviously, so then let's just say there, so you've got 75%, you've got an extra 25 to play with. Obviously, you want to have a little bit of a buffer as well, but that's separate to investing. The third thing, where we've got investing, crypto, gold. I'd also want to be looking at adding things into upcoming markets. So this would be things like AI, and potentially Asia stocks. So things that are a little bit riskier, because it's better to have your fingers in pots at a low, because you can get quite a good gains from them. But you don't want it to be the main part of your portfolio, because the risk is too high, right? You've got to diversify. But as time goes on, we'll learn this a bit more. Let's see, Goldie. But yeah, I just find it so bizarre how gold is so high, the US stocks are so high, and Bitcoin's so high. It's never the case. Look at this, Bitcoin's making an all-time high right now. Holy shit, man. What time is this at? 6 o'clock. Huge amount of push. 6:30. Welcome back to Hal. Thank you very much, Dijan. I hope you're doing well, man. Hope you're doing well. Hope you are doing well. So, where can we start? Obviously, as time goes on, we'll be a bit more fluid with this stuff. It's just starting now. So if I get this FTSE 100 on, let's just take a look and see, because I think FTSE 100 is also very high. And then we're going to be looking at individual stocks, because I'm also going to be looking to potentially short but also buy individual stocks, which will be the last bit of this portfolio. And if anyone in the chat already does invest, where do you invest? What brokers do you use as such? You know, there's Trading 212, there's Vanguard, there's Hargreaves Lansdown, there's quite a lot. 40. So yeah, maybe this is 5 and this is 10. But as time goes on, we'll actually get these proper numbers of what I want to do. So 4 hours reflipped on gold again. See how we base it down here, back at 703. So while we're waiting for this, I want to go through crypto. Let's go through crypto while we're here. I'm just trying to think of the best way to systematically do this. Let me take a look. Why did I do macros? Yeah, we'll do macros. I think macros is easier to start off with. So, the economics, right? The first thing is that we have two parts of it. We have microeconomics and we have macro. Macro is the bigger picture of everything. We'll start on the bigger picture because I think it is easier. So the GDP is the total value of goods and services produced within a country. So the current GDP of the UK, I wish I can find it here. I'll be able to find it online. Now I'm pretty sure in recent times the UK has been a little bit of a plateau. Yeah, you can see here. So the GDP in November 2024 was 0.1. 0.1, bro. Which is a very, 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 very bad telling sign for what is to come. So in terms of investing as such, you don't want the growth like that at all. But let's just write this down. So GDP is the total value of goods and services produced within a country. So it's the broader term. So what I'm going to be doing is when I add onto this sheet, I'm going to make it obviously neater as time goes on, and hopefully we'll have quite a big database of all this stuff. So an unemployment rate, the percentage of labour force that is employed, unemployed and seeking work. So what we can do here is look at the two currently. So the UK GDP is at, where was it? 3.34 trillion in USD. Okay, so this is by year. So yeah, look at the change, man. The change was 0.7 in 2024. But you need to remember the inflation. So another thing that we need to look at is inflation, because the change doesn't show the inflation either, does it? And I think there's a tab here. Let me just see if I can find it. FT schools, where they actually give you questions to ask with the actual article. So here we go. This is good. So economic class, UK economy 0.1 growth fails to hit forecast. Now, why are we struggling to hit forecast? That's the thing that we need to know. Why are we struggling to hit forecast? So if I asked ChatGPT, why is the UK struggling to gain forecast for GDP growth? So currently in this economy in the UK, we've obviously got a government that's left leading, and therefore taxes are high. But they actually did it in a bit of a weird way. They did it relating to businesses, which is not going to help with national insurance. So we need to delve into all that as well, which we will through time. Yeah, so inflation pressures, elevated inflation pressures. So I think the first thing that we've got to look at is 0.7% in 2024. UK inflation. UK inflation. So this is where we get some of the news here. Look, United Kingdom experienced a notable decline in inflation rates, aligning more closely with the Bank of Rates target of 2%. Here's some of the inflation. So inflation decreased 2%, reaching the Bank of Rates target for the first time in several years. Then it rose to 2.3. The increase was primarily driven by housing and housing households, which saw inflation rise to 5.5 from 3.8. Inflation slightly decreased. Okay, so what we need to ask now is, what is the relationship with, actually, let's just delve into what is the relationship between inflation and interest rates. Does anyone in the chat understand inflation? And I understand it, but I want to make it so I'm so on it every single time. So higher inflation, higher interest. When inflation rises above a target level, central banks often increase rates to slow down the economy and bring inflation under control. Okay, this is a good one. These are good things. We can work on it from here. So, so what does this mean, right? So it looks like when there's higher inflation, so let's just say there's an increase in inflation, the Bank of England is like, shit. The inflation means you're getting less for your money. Now, how do we stop that? Well, we increase the interest rates. So from my understanding, increase interest rates. The reason why we increase the interest rates and why that does help is because, first of all, for borrowing money costs more, and therefore, companies, but also just people in general, and the public are less inclined to borrow. So I always think in this situation, when the interest rates are high, I think of it as your bank, right? Your bank goes, look, you've got an extra 0.5% on the money that you've got in your account. You then less inclined to spend that money because they're giving you, money to just hold the money, right? If the interest rates were low, then there's no reason for you to hold the money, right? Because you're not making any money on it. And that's why, obviously, when inflation is high, that's where you get the issue when the interest rates are so low, because people are spending the money but not getting enough for it. So if I go to here, where was it? So if inflation in the UK rises to 5% above the target, the central bank might raise interest rates to, say, 4%. This makes mortgages, loans, business credit more expensive, leading to reduced spending. As demand increases, inflation is expected to fall. Okay, so that sentence there is really good. Okay, so it makes things in general more expensive for just both businesses and people, which decreases the demand of buying things, and therefore the prices have to fall. So let's just say that fruit at the moment, let's say some strawberries cost £1, but if you give the interest rates higher, people are less likely to spend on the goods, and therefore the price of hopefully the strawberries will fall because the demand decreases. Yeah, that makes sense. Yeah. So then when we looked at the forecast here, and we look at interest rates, where was the last interest rates? Probably here. Where was the last interest rates for UK? See if I can find it. And this means when you're looking at a Forex factory, you understand it a bit more. And again, what we'll do as time goes on, we'll keep on testing ourselves. So yeah, here, Jan 16, you can see this is the GDP. So we forecasted 0.2, previous was negative 0.1, and we grew 0.1, so still less than expected. Okay. So it looks like, and look at that, look at retail sales. Oof. Retail sales. My boy, hello, hey, hope you're doing well, brother. So what is interesting here is you can see that we've had a negative on the retail sales, which was obviously for the period of, was this December? It must have been December, wasn't it? Because it's from the previous month. So we had a negative month through, I want to know if this is January or December. Because obviously we know as a country, and I think in any country, December is normally quite a good spending month in terms of just the overall economy. And we've had a negative, which is not good for any of the companies. So if we go here, I'm pretty sure there was an article recently about JD. Can you search here? Yeah. JD. Yeah. So again, if we knew, if we know in the back of our heads that the retail sales have been bad, shops like this where it's just clothes, it's all goods that are wants, not needs, these will struggle. So JD sales said full year profits would be lower at the end of its guidance range because of unseasonal weather and weak consumer demand. Shares to a more than 2-year low. So its pre-tax profit is 955 in that range, after there had been much softer demand towards the end of its most recent quarter. And that's because people don't have enough money to spend on wants, sorry. So if I look at JD stock right now, and I wonder if JD is on, JD's in NASDAQ. No, that's different, isn't it? UK. Let me take a look at this. So you look at that in the last 6 months, 26% down. The year to date is already down 9% because of this news that's came out. Interesting. And later on in this session, we'll get into FTSE 100 and start to delve into this. Let's just step back on Monday morning and my record high last week. So you can see, actually, look at that. Asian stocks are starting to come up. Back in the UK, average house price data for new homes according to data showed 1.7% rise this month. The largest monthly jump in price. So it looks like they're explaining that the FTSE has been actually doing quite well because of the housing market. So the next question to ask here. The good thing about ChatGPT is anything you want to ask it, it will just tell you, and it's absolutely class for that. Does the housing market have a big impact on FTSE 100 in the UK?
The housing market and FTSE 100 and index of the 100 largest companies are related, but their relationship is indirect and depends on various factors. The FTSE 100 represents large multinational companies, many of these of which generate significant revenue to global markets around the UK. This limits the direct impact of UK housing. Dominant and therefore it's not heavily tied to housing prices. Sectors that are affected. Banks, yeah, okay. So certain 100 companies sectors are more sensitive to the housing market. Large UK banks have significant mortgage lending businesses. A strong housing market boosts their earnings, while a downturn can increase loan defaults. While a downturn can increase loan defaults. What does that even mean? Companies involved in construction, property development, or real estate services can be impacted by housing demand and prices. However, many large UK construction firms are in 250, not 100. House price movements influence consumer confidence. Rising house prices can lead to a wealth effect, encouraging spending on goods sold by retailers. So yeah, there is a little bit of an impact there. Rising house prices increase household wealth, encouraging spending, which benefits sectors like consumers and goods. So there is a trade-off there when housing prices get larger. So are they saying that, let's just say my house was 800 grand, now it's worth 1.2. I've got basically 400 grand worth of equity, and therefore I have more of a inkling of spending. I think that's what it is. Interesting. And another company that I'm looking to potentially short if I've got, and basically what I want to do in this as well is looking at the financial statements. I want to be able to look at, let's just say Apple, look at the financial statements and see what their actual balance books are looking, because I'm thinking just in terms of my geek tech head, and Apple as such in recent times have not been innovating at all. They've had a failure on the previous tech, what was it called? The Apple VRs, what were they called? Yeah, the Vision Pros. I'm pretty sure that was an absolute flop. I'm pretty sure they've stopped it. So yeah. Significant reduction in production of Vision Pros due to dropping sales. Oof. Oh my god. So it looks like gold has had a bit of retracement. Is that corresponding to the fact that Bitcoin is pumping like hell? It's interesting. There's articles as well about Bitcoin being the new... let's see if there's Bitcoin and gold here. So far we've learned that the interest rates are gauged towards what is happening with inflation, right? They're pretty direct. And that means you can start to forecast by looking at other things of actually what these datas are going to come out as. So when is the next bank of rates? Let's take a look and see. I got sidetracked. Let's take a look. Can I just search for pound? I can't seem to find it. It's normally after the retail sales, isn't it? Take a look. Why can't I find it on here? I swear it is on here. Anyway, we'll find it as time goes on. So I think probably the next thing that I want to go through today is about unemployment rates. So what I'm doing today is just going through the basic foundations of a country as such. So for me, UK unemployment rate. Let's take a look and see what that currently is. Let's go back. Oh, this to be fair, this is the claimant counts change. Where's the interest rates? Where's the Bank of England interest rates? I want to find it now. But this was a good week last week to go through it. So let's just see if this makes sense, right? Changing the price of goods and services purchased by customers. Actual rate is good for currency. So that's the next thing that I want to learn, right? Next thing that I want to learn. Changing the price of goods and services purchased by consumers, right? Why is the change of price? So the change of price of goods and services means inflation, right? That's what it is. I'm pretty sure. Is CPI inflation? Yes. Okay. Yeah. So let's just do this logically here. So inflation is 2.5%. They expected 2.6, so it's still higher than they want. They want to get back down to 2%. So knowing this, it's higher than what they want. So I expect potentially, depending on obviously where they go, to maybe increase the interest rates. But again, that reduces customer spending. So in terms of the government, they've got to think, right, inflation is higher than we want, but the retail sales is obviously even worse. So if you go down here, GDP in terms of what we're producing is gained a little bit, 0.1, but still not vastly. But the difference is the retail sales. So look down here, retail sales negative. So therefore they've got to think logically, if we put up the interest rates, people are most likely going to save their money because the interest rates are going to be in their favor to save money and therefore less spending. But that means less retail sales, and therefore, companies in the high street, in terms of business borrowing, is very, very bad. So they've got to weigh up those options, and that's why we don't exactly know if the interest rates are going to go up or stay with it. Claimant count change, changing the number of people claiming unemployment. Okay, this is today, isn't it? Oh my god, this is today. Oh no, it's tomorrow. So tomorrow we'll see how many people. They're expecting 10,000 people to change, which is not good at all. So let's just go back. We're getting sidetracked again. There's a lot of information to delve in at the start, but as long as we're going through it. Oh, hey, you are streaming again. Hello, Venue. Hope you're doing well. Yeah, I'm back with it, man. I've changed the kind of notion of this stream. I want to learn a bit more about finance and economics as a whole. And I thought, why not instead of doing it by myself in the morning, why don't I just do it to everyone? And hopefully, as I've got this back testing potentially underway, I can also take my trades as well. But we can discuss trading ideas. If you guys have any charts or any ideas, make sure to send them in. We can go through it together. But yeah, in recent times, I want to back off the trading. Again, the reason why I stopped trading the second time, the first time was because I took 2 losing months. And I said to people in the group, if I took 2 losing months, I can't take money off you in terms of the group because I'm not making money myself. The second time was I was just so bored at looking at a chart all day. It was fucking boring. It was so boring, and I knew that I needed to do other things, and that's why I love my other job now. It's so fun, but the way that I've learned it is it's just amazing in terms of stuff. But yes, so currently, if I actually do this, 1 second. I know you guys can't see this. Let me just do it here. So this was an L. I'm going to write my formulas here in a second. But currently, I've got about, let's just say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 wins, 3, 4, 5, 6, 7 losses. 19 wins, 7 losses. Currently up about 40%, near towards the end of February. But most of that game was in Jan. February is a little bit slower. But yeah, it's going well. And again, this strategy, if I can do this on the side, it'll be so much easier. I'm already looking at it, and I'm going to be back testing live as well. I'm currently 19, soon to be 20. What is this? 1 second. I'm currently 19, soon to be 20 in May, and I have now a 9-to-5 job currently. I don't trade much anymore, but still have some of it in my head. Very nice. Yeah, I think there's a balance, man. I think, I understand people want to just do the trading thing, but trust me, it is not. Obviously, if you're very good at it, and if you're making good money, I understand. That's great, but it's not the be all and end all. And I think people put too much pressure on learning to trade straight away. Mate, life is about learning so many more things than looking at a fucking chart, I promise. Right, I'm quickly going to go to the toilet. Every 2 minutes. Was very good with it, but don't have a big balance. I just use demo account to learn and make money using prop firms account to trade with. Very nice, very nice. Yeah, I mean, I just think for an introvert, I think, yeah, trading is absolutely great. But when you're not an introvert, it's just fucking, it can be tedious at times. And I realize, like, especially when you're with a group, when I started my group, it was only because I was doing well with trading and people were asking me. I was like, well, why not, right? But as time goes on, you think emotionally with the group, and all I wanted was the group to do well and provide value. But the issue is that you stop really looking at the charts as much. You start focusing on the group's education, but you're not looking at the real life market conditions. and therefore it's hard to keep the same strategy going for a while. You've got to be able to change, and I just didn't do that, unfortunately. But yeah, I think as well, guys, which I'll probably go for another video, is mine, ChatGPT for building things. So I'm actually starting a new business soon, basically to help younger people learn skills that they could do at school, because, you know, previously we've just had paper rounds, what people can do when they're younger, but now everyone's got a computer and they can learn skills. So I'm actually going to make a little group where they can come, they pay me like £10 a month, and they have people all over the world who know how to edit, code, start up a business, and they can learn those skills together. I've got people that have started up companies, obviously myself as well. I'm gonna make it into quite a good like education thing, because people don't get taught that at school, and that's the niche. So that's the other thing that I'm working on in the background, because that's what I like doing. I like building businesses. I like doing that. I find that so much more enjoyable than just looking at candles in the chart all day. But yeah, if this strategy gets up and running, I will be taking those trades on live and just. But the good thing is that because I won't have a group that are taking my signals, I don't care about the outcome. It's my trades, and therefore the pressure in that regard is off. And therefore, because when you have a group, you kind of like, and people are messaging me like, oh, when's the next trade? It's like, well, that I don't need that pressure. I don't need that. Oh fuck! And then you might take entries that if it was just you on the trade, you probably wouldn't have took, because you don't have that pressure, and that's what I struggled with. Too emotional with people. I wanted to get the best for them, but unfortunately, that's not the way to do it. You've got to be very selfish in trading. And I'm just not that kind of person. So, and that's why you see all of these TikTok traders, and they don't give a fuck about you, and they'll rinse you for all the money you've got. But I'm just not. I just couldn't do that. I'm not that person. I'd much rather build businesses and learn together. So yeah. So it looks like Goldie here is rejected off a little bit of an order block here. People would say back down to 703 as expected. So carrying on, what I wanted to look for here is this, right? So the change of price in goods and services, so inflation, it actually impacts the currency, which is interesting. Why does CPI impact the currency? Okay. Left me out. TikTok traders, yeah, man. And what you've got to remember, these TikTok traders and this stuff, and they're all flexing, whatever. You need to understand, these people didn't go to uni. These people are not clever people. And therefore, the only thing they have is to milk you for all they've got. Because if they don't, they're going to end up at a fucking car wash. Whereas I didn't need to do that. I've got other stuff going on. And therefore, my morals, were different. So, let's take a look here. So high inflation, so high CPI. The central bank may raise interest rates to cool the economy. High interest rates attract foreign investors seeking better returns, increasing demand for current and potential strengthening. So high CPI, currency strength. If inflation rises modestly and the economy appears strong, investors may expect interest rate hikes leading to currency appreciation. So if inflation rates rise because there's demand, and the economy appears strong, investors may expect interest rates hikes to reduce the inflation, leading to currency appreciation. So why is this true? Nice to see you back, Max. Are you back good for now? And how's your life outside of trading? Still working a full-time job, or have things changed? Yes, I'm still working. I am nearly a full-time BA now. Nearly got the qualifications for it. I love it, man. I just absolutely love it. It's just absolutely everything that when I was younger, you know, I was that person where I go into a restaurant and go, oh, how is this working? What could be better? Is the you know, what's their balance sheet looking like? How can we improve? You know, how could they improve the service? How could they improve maybe the demand? That stuff is what I do on a daily basis for this company, and it's fucking sick. Sometimes I'm working with people, learning how to do a manufacturing line quicker. I've just currently spent £150,000 at the end of last year on re-establishing a manufacturing line, which was my own work completely. And it's just sick, especially the fact that the company that I'm just in have just been bought by an investment firm. So they're looking to invest, and therefore they've got money to splash. So I'm basically spending all that money on all my ideas, which is sick. But that stuff, you know, online, it's so easy to say, oh, Max, you've gone to a 9 to 5, you're back in the matrix. But I'm learning skills that I would never have learned. And that means, especially for a BA, I know how to run a company. If I started my company back again, I would do things so much different in terms of getting things done. You need to remember, I've got crippling ADHD. So procrastination is one of my biggest issues. And with that comes, you know, I remember times like on stream where people would be like, Max, can you do this? Max, can you do this? I'll go, yeah, I'll do that. And I generally would think I would do it, but I would forget instantly after the stream ends, and therefore nothing would get done. Whereas now I use these things called sticky notes, and every single time I've got an action, obviously not on this computer, I don't have any actions at the moment, but I'll write them down here, and therefore I've got an action list for the day. Once I've got an action list for the day, I do everything on it. But I wouldn't have even known that type, because I actually learned about sticky notes and the way to like do actions from one of the execs in my company. Bear in mind, the execs get paid a shitload of money in my company, and I've had that privilege to be with them pretty much instantly, because the company's not that big. It's like 500 people. It's still quite big, but yeah, learning these skills is absolutely priceless, and I wouldn't have got that by staring at a fucking candle all day, you know. So do remember that. Don't make it the make or break of your life as such. There's so many other things. When trading goes wrong, which it did for me, you know, a time where I just couldn't get up and running again. What are you gonna do if trading's your only thing? You're just there, just crippling, losing money, and you need to have a good basis of other things. So what did things say here? Where's my... Okay, so the relationship between expected interest rate hikes and currency appreciation exists because of how higher interest rates affect the attractiveness of currency in global markets. Here's a detailed explanation. So higher returns on investment. When a central bank raises interest rates, financial assets denominated in that currency offer higher returns. Sorry, we've got past unemployment rates. We're currently doing this because it's on Forex Factory and it's good for people to know here. If the Bank of England raises rates, UK government bonds yield... Okay, so this is what we should go through. Government bonds. So it's foreign investment that gives you the boost of the currency. So let's take a look at bonds, right? Because I think there's also been a lot of issues with the UK bonds at the moment. UK bonds. What's going on with UK bonds? Notes have been used ever since by kids in elementary, man. Yeah, sticky notes, bro. But even the way they segregate it and, you know, prioritizing tasks that could be done now or later or through the week. So UK bonds. Let's take a look at UK bonds today. Okay, this is good. US bonds and UK gilts are tracking each other and heading down. Today on the show, Okay, that's more of a video. So I remember actually doing bonds at uni. Let's take a look. What is a bond? A type of financial instrument that represents a loan made by an investor to a borrower, typically a government, corporation, or organization. It's a way for the borrower to raise funds for specific purposes. Okay, yeah. Oh yes, I remember all this. Coupon rate. Okay. So, and hopefully at the end of every single week, I can send you guys all of this in details of what we've learned through email, I think. So yeah, you basically set into a fixed rate. Interest rate of the bond pays expressed as a percentage of a face value. A bond with a 5% coupon rate and a face value of 1,000 pays £50 annually. The investor buys the bond, effectively lending money to the issuer. Okay, the government bond issues a bond. Face value 1,000, coupon rate is 4%, maturity 10 years. You'll see £40 annually in interest payments. Okay. So, let's take a look here. UK, I'm trying to see what the UK bonds. Take a look. UK bond rates. Okay, so currently, I want to see a chart, bro. Give me a chart. So a 2-year yield, 5-year, 10-year, 4.66%. So they're actually. So this is the issue with the left side in terms of the government, right? The bond rates have gone at 4.66%. So they're spending our tax money on borrowing more money, which is the issue with obviously the overall debt as such. 4.66%. Let me just look on UK bond rate. 10-year chart. Here we go, okay. So last year we were at 3.9, currently we're at 4.6, so a big increase. So UK bonds last year was 3.9%. Now it is 4 point. What is that? 4 point. Where is it? 4.6. What does this show? Morning, pal. Hope all good. Hello, Josh. Hope you're doing well, brother. Back then, when I was a kid, London used to look great in my eyes. Nowadays, nah. I wonder why. Interesting. Okay. So first thing, higher yield, higher interest rates. Bond yields rise when interest rates are expected to increase or when inflation is anticipated to be higher. If investors expect the Bank of England to raise interest rates to combat inflation, they will demand higher yields on bonds to compensate for the increase in interest rates. Okay. If inflation isn't rising, bondholders want higher yields to protect the real value of their returns. There we go. Okay. So they've got to increase. So the bond yields, they're going to ask for more because the interest rates are getting higher. And therefore, it wouldn't make sense to hold the bond because you're losing money on inflation. Okay. Because, as you said here, the coupon rate, if it gets obviously over inflation, then why would you hold the bond, right? It makes no sense. So foreign investors like this because they're getting a good return, especially at the moment, which then goes back to I still don't understand though. I still don't understand why currency, why pound yen would increase. Because if you look at pound yen as a whole, right, we're quite high, aren't we? We're quite high. So, okay, I don't know why I say thanks to ChatGPT. If bond rates are high and inflation is high, why does, for example, JPY increase? The most important factor influencing currency exchange rate, especially in pairs, is interest rate differential between the two countries. If the Bank of England raises interest rates due to higher inflation, the yield on GBP-denominated assets like bonds increases. On the other hand, if Japan's central bank keeps interest rates low, which has been common, the interest rate differential between the UK and Japan widens, making the GBP more attractive for investors compared to JPY. If the UK has higher interest rates, global investors might demand more pounds to take advantage of the higher yields, which leads to an increase. Okay. Global investors might demand more pounds to take advantage. I still don't know why though. Global investors might demand more pounds to take advantage of the higher yields because it's got a good interest rates. Again, this is my messy draft, but as time goes on, I'll make this a little bit cleaner. Well, we've learned a lot so far. I mean, I've learned a shitload. So if I ask now, we'll go to unemployment rate. Why would employee rate reduce in a country? Because we know currently have we even had it yet? It's on Tuesday. They're expecting a massive increase, and this is what we don't want in an economy, right? More people go onto the benefit system, and therefore more people we have to pay for. It's a month earlier than the employment rate. Okay, so it's a month earlier than the employment rate. Although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health. So falling demand. So I think the reason why we're obviously going to have a reduce of unemployment rate is because companies, if you look at the what Labour have done, they have reduced. Sorry, they've increased Labour. What was it? NI increases. Secretary is currently setting out we'll reduce to 5,000 a year. Yeah. Okay, so this is where the difference is, right? Previously, a company would have to pay, the threshold will be 9,100 a year. So after they've made that, then they have to pay 13.8%. Okay, so if we do some maths here, let's just say someone is on 30k. Okay, so that starts after 9,100. Okay, so 20,000. Then they've got to pay the government 138. 2,800 before. Okay, so £2,800 the company would have to pay per person that was making 30k, which is, okay, that's fine. So let's just write that down somewhere. And this is where we're going to see, I think, a big change. So let's go back Now it's actually at 5,000, so it's reduced at when we hit the 5,000 target. You then have to pay. So now it's 25,000, but also it's been targeted to 15%. Now I think the government are saying because we're trying to get the big businesses that have their own money to spend to pay for this, but what they don't realize, I think, is such is that businesses will just let go of people. So yeah. So look, the difference 2,884 to 3,750. So an extra £1,000 per employee. Let's just say that you've got, I don't know, 300 employees. Sorry. So you've got an extra 1,000, and now you've got 300 employees, right? That's an extra 300 grand that you've got to find as a company. So what's easier? You know, getting a bit more efficient and sacking a couple people and getting rid of their whole 30 grand salaries. All you need to do is sack 10 people. Or pay the NI. Well, that's what businesses have to work out, right? But that's where the unemployment rate comes. So it all links, it all interlinks, and I think the more we know about this as a group, the better we can go. We can actually look at these factors. Because remember previously on anyone's Forex factory, when we're looking at news with currencies, we'll go, oh yes, it came out as better or negative, and we kind of just go, yeah, that means stronger or whatever. But if we really deep it, we can see the whole picture. And once you can see the whole picture, you can actually make some good trades on companies. For example, when you know unemployment rate is bad, when you know retail sales are bad, you know stores are going to be struggling, such as JD, and therefore you could have shorted JD. Interesting. So that's enough economics for today. We've done a lot of economics today, and it has been interesting. Hourly candle on gold is closed bearish. It's closed below support. Obviously still overall in the day, still respecting this resistance, which is pretty high. And Bitcoin is flying, man. So I want to step away from the investing bit, and I want to go into, in the economics bit, and I want to go to more of the investing. So let's quickly look at FTSE 100. What is FTSE 100? Someone put in the chat, what is FTSE 100? You tell me. What is FTSE 100? See if we can get into... let's bring in FTSE 100. Okay, I might have to buy this. I thought I already bought it. So you actually get the full digital divisions. Yeah, I'm gonna buy that. I'll buy that after. So let's just ask ChatGPT. FTSE 100. What is it? So FTSE 100 is also known as the FTSE 100 is an index that represents the 100 largely publicly traded companies, in the UK. So let's write this on. Now that's good to know. Now, I think the first thing that we want to really do is look at what is in what companies. Let's take a look. I want to do in volume. Let's take a look. So if you look in the past, let's just say 3 months, look at this. We're at an all-time high. We're at an all-time high in the FTSE 100, which doesn't make sense, does it, really? In terms of what everything else is saying, in terms of retail sales, in terms of unemployment, which again is an area where you can potentially think. But what we also know now is that because the interest rates are still high, because the bond yields are high, it's good for foreign investment because it's cheaper, it's discounted, and that's where we're seeing the push. Top gainers, we've got Entain, we've got JD Sports. If I was to buy the FTSE, how could I do this? I think this is on a different broker. We can go, yeah, look at this. What is the FTSE 100 split in sectors? Well, the top companies. So that's just embarrassing, isn't it? That's embarrassing, bro. The fucking COVID pharmaceutical company is the biggest company in the UK. That's how shit we are. Then we've got Unilever, which has loads of different brands. We've got a beverage company because we like drinking. Then we've got banks, oil, another pharmaceutical, oil. I mean, that you know, that is wild, right? There's not one tech company in the UK because I think there's this thing of where would you IPO? And I think the main thing is that you'd rather IPO, especially if it's a tech company, through the Nasdaq because there's just so much more wealth in there. Why is the FTSE 100 so high at the moment? So many of the FTSE 100 companies are multinational, meaning they earn a significant proportion of revenue outside the UK. If global demand for their products and services increases, it can have a positive impact on their stock. So it's not even just, yeah. And this is why, you know, even though it is, even though they've IPO'd, they've you know, their stock is on the FTSE, they can actually make their money across borders, and therefore there's not a real correlation unless they are fundamentally in the UK. So for example, if we go back and we go, where is JD operating? Because we discussed before that JD is struggling. So UK, Ireland, yeah, to be fair, it's quite broad, wow. Oh, this is a different JD. Close store. JD US. So there's 128 in US and Asia. To be fair, there is quite a lot. But you can see, look, the large majority, to be fair, you can't see this. The large majority of JD stores is in the UK and Europe, right? And therefore, that's why they're getting the big hit, because most, I mean, 50% nearly of their total stores are in the UK, and there's been a real bad decrease in retail sales. Interesting. Interesting. So what have we looked so far? We looked at some FT news. We looked at Forex Factory starting to break down some economic areas. We've looked at macroeconomics. We've looked at bonds as such. We've looked at inflation. We've looked at interest rates. We've looked at GDP, and we've looked at trade tariffs. I think that's a big start for the first day, and hopefully we can continue to add more on every single time we're here. which is not bad at all. Not bad at all. Do we have time for crypto? Let's ask crypto. What is crypto? So I think the first thing is, yeah, unlike traditional currencies, they are issued and regulated by governments or central banks. Cryptocurrencies are usually decentralized and operate on a peer-to-peer network. This means there's no central authority. Yeah, we understand that. We understand that. Let me go back onto the crypto one. So I understand this. It's decentralized, therefore governments can't have as much impact or skew in the direction of the currencies, which is good. Which for me is as well, especially at the start, is reasons why it's so popular, because it's not completely controlled by governments. Most cryptocurrencies operate on a blockchain, which is a distributed ledger that records all transactions. Each block in the chain contains a list of transactions. These blocks are linked together to form a chain. Blockchain ensures transparency and security in transactions. So this is really key to what people don't understand with crypto. This is, for me, the reason why I liked it at the start, because think about it, right? If there's a place where you can move money around, but it's all documented, piece by piece, what does that mean? Someone tell me, what does that mean? What does that mean we don't need to really do? We don't really need to have accountants. We don't need people to read between the lines of money going in and out, because it's all documented. Which for me, when people say crypto it has no value, that's value in itself, because if you can start to implement that into things in real life, where you can have ledgers that go through blockchains in terms of money in, money out, I think that's quite an important thing, and the fact that you can't change it is good. Cryptocurrencies are advanced cryptography to secure transactions and control the creation of new units. This makes it difficult to anyone to alter past transactions or counterfeit the currency. Very, very good. So that's another thing where it's like, yeah, that makes sense of why there is value in it, because you can't edit the data. Same thing here. Users have to authenticate. I mean, that's probably the same as crypto as normal currencies, right? You still need to authorize it. Now, this is probably where the government and people who don't like crypto have a big say in. They're saying that people can be doing some illegal activity with crypto, and therefore we have no sight on it. But that's what they try and persuade it to be. But realistically, it's because they can't tax you on it, or they struggle to tax you on it, and they're still trying to find ways to tax you on it. And for me, this is the only issue that I have with crypto as the risk, because if governments are sick and tired of not getting their greedy hands into the investment pots of people who are using crypto, and they can't tax it, they'll find ways to tax it, and they already have in the UK, because this will then reduce the demand of crypto, because therefore there's not as much monetary gains, right? Issue 1. Because if you think about it, if they can then directly tax it all, it's going to be a little bit harder in terms of, because there'll be less demand, because people just won't be using it as much, because there's less demand for trading it and holding them. So they're purely digital, which is great, which means the cost of actually sending things is quite cheap. You don't need a structure, you don't need physical places, right? You don't need banks, you don't need to pay rent in London for a big bank. It's very cheap, which is another pro. Keeps costs low, and therefore you can move money cheaper. And this gets onto a good one. Limited supply with Bitcoin, and this is another thing. Why is Bitcoin, which we'll finish off with this one, why is Bitcoin so popular. And I think that is one of the main things. Bitcoin hits 1,000. Congrats on the money, everyone. It's challenging to discern what on the horizon for good after this big run around, given the well-known and glaring problems with trying to figure out how much Bitcoin should be worth. Even after the recent fall in prices, the total market value is 1.5 trillion. A staggering amount for a virtual object that are nothing more than a computer code. Well, I think it's a bit more than a computer code. It's better than humans, which is, you know, I think a positive. What shook trust in banks? Okay, so it's emerged amid a global financial crisis which struck trust in banks and even governments, which was perfectly timed. So this sentence already for me shows why investors have a stock in crypto. I mean, how many governments have a stock in crypto? How many governments have crypto? So we know El Salvador has a huge amount, but I think there's also, yeah, look at this. Countries with central bank digital currencies. So you can see a lot of governments are trying to make their own digital currencies because, again, they want to tax it. And therefore, this stuff is like, well, a digital euro, a digital pound is not what people who have crypto are wanting, because then they can track every single thing that you do, and therefore they can tax every single thing that you do. Provide legal clarity for cryptocurrencies. The UK has implemented regulatory measures to monitor cryptocurrency activities, such as requiring crypto exchanges to comply with anti-money regulations. So cryptocurrency is banned in China. Let's crack down on crypto exchanges and banned financial institutions from dealing it. Yeah. So it looks like the countries involved in that BRIC kind of situation are not liking it as well. So how much crypto does How much crypto does Europe market size? Europe accounts for around 25 to 30% of the total global cryptocurrency market capitalization. This includes the total market value of leading cryptocurrencies like Bitcoin and Ethereum. So they have a huge stake in crypto. And you think about it in terms of a government treasury, they're offsetting their risk in case, you know, issues like that happen. And therefore, this is why I really don't understand, right? Obviously, I understand that, you know, the bull market right now, it's just a bull market, and, you know, Trump's coming in, he's very pro-crypto, and I understand that. However, the more it pumps up, it starts to worry me with investors of other things. So when I'm looking into invest, obviously, if I start to invest, obviously I've been investing for a long time, but if I start to really hone in on investing as such, is this the perfect point for me to invest? That's the question you've got to ask yourself. And that comes down to, again, trading, right? Let's just say, you know, price is pushed up, bullish on any of these charts, even though we haven't actually really. When's the time to, you know, start taking your profits? And what I want to learn for the investing page, which we'll get to in a second, is what is the best way to invest into these things? Do you just put it all in and just wait? Do you cost average, which is what I potentially want to do? Because if you think about, if I go to NASDAQ, if you look at NASDAQ as a whole, right, and obviously it's huge. Look at these gains. Obviously, right now, right at the high. What you need to remember is if you cost average buy it. So what I mean by that is every single week, let's say you put in X amount of money every single week. So if you look at the weekly candles, right? Let's just say when we started streaming, I started streaming 2021, right? let's just say that you buy every single time. You buy here. You buy every single week. You just buy. So you're buying every single one, every single week, right? And again, you don't care when there's a bearish market. You don't care when there's a bullish market. You don't care. You're buying every week with pocket change or just money that you have on the table that you're happy to lose as a whole. Your average, if you think about it, overall is probably going to be right around here, isn't it? And therefore, you don't care if this drops. If this drops down here, that's fine, because what you'll be doing is you just cost average buying every single week. And therefore, let's just say it comes back down to 6,000, right? Everyone will be shitting their pants, right? But if you think of it logically, if you're just buying every single week, right? Your average now, after this drop, is probably going to be somewhere towards maybe here. But you brought a lot down here, and you only actually had these highs for a certain amount of time. You had this period for much longer. Your average is probably going to be around here. Okay? And yes, that's still quite a significant drop. But again, what you're still doing is cost average buying here. And we always know there's always going to be an extra bull market when things start to fly again. And then when you start to push back up, you then, you know, your average, let's just say it gets back up to these highs, will probably be right around here again. And therefore, you're always in. You know, that's what I want to be learning and looking to do for the foreseeable future. I've been doing it for a while anyway, but I want to do it a little bit more structured in a way where I can see all of my my stocks going up, my stocks going down, but just cost average buying it every week. It just takes it out of your account. You don't care about it, because all this money, imagine, let's just say that you buy a Costa coffee every single day, right? Let's just say it's £6 every day. 6 times 7 is £42, right? £42 you put in every single day. By the time you're 70 or 80, no matter what you do with your life, you're going to have a good amount of money in a pretty good place because you've bought all the time. Now, what I actually spoke to you about with some of my mates who've done very, very well with crypto is this is what they've been doing. I mean, I bought XRP in 2019, but I just bought a big chunk of it, sold it later on. But if you just average it every single week, you just put a little bit in. Let's just say you started when things started going well, I don't know, or any time here, you'd be up an absolute fuckload for doing nothing, just putting in, just being less greedy in your day, spending too much money on other things, and just adding it consistently over time. And if it goes to zero, it goes to zero. It was only a fucking Costa coffee every day. And that is the benefit of it, just being in. And that's what I want to do myself, but also learn to people. You can get rich from just cost average buying and increasing your income as time goes on, but just distributing it into loads of different things. And that's what we'll get to in investing, right? Investing is not about buying one thing and it doing well. It's about spreading the differential across loads of different aspects. But just keep on doing it again and again every single day. Without having the issue of going, oh man, it's going to drop. If I bought Bitcoin right now and we drop back down, I'm going to lose all my money. But if what I'm looking for realistically is once we start having a downtail, I don't want to catch the high because it's just going to be a little bit of an L. Then I'm just going to start cost average buying every single time. And by the time we go back down to, let's just say 50, and we come back up, my average is here and I've made fucking 30 grand. And that is what the rich do. My dad's been cost average buying this fucking bitch the whole time. He's got a full Bitcoin now. It's like, motherfucker. So that's what we'll probably work on in the next session and show, maybe doing some prime examples of it. But yeah. So looking like this Goldie over here is rejecting this previous zone. Take a look at the 15, we're coming down. Look at the hourly. The hourly's got a strong bearish closure below. See how this candle closes. If we break that low, we've got at least to this low here. I might take a little trade while I'm here. getting into the motions of it. So the hourly's got 30 minutes left. 50-minute close bearish. Daily candles now made the top wick and the bottom wick. We've got a little bit of a downtrend so far. And we should, especially the fact that Bitcoin is so high. People are using their money to get into Bitcoin, boy. So maybe later tonight I might start my back testing again on Goldie, see where we get up to, and hopefully I can have the data to then start trading it, which should be good. But yeah, I think it's been a good session, so let's just take a look at the list. Let's take a look. Okay, what have we done? We've looked at Forex Factory. We've made sure we understand a bit more that's going on in terms of the news as such and what we actually know about the news. Macroeconomics, we've actually gone through quite a lot of that actually already in one day. We've gone through tariffs, interest rates, inflation, bonds, and also in our investing, we've looked at the FTSE 100. We understand that it's the top 100 companies in the UK, but they can, you know, they're big companies, they work globally, and therefore you can't just take a rash trade as such, or because companies are, you know, a multinational, right? Especially in FTSE 100. But what we've learned with FTSE 100 is there's no tech companies, there's no companies that are innovating. It's quite old companies. So it'll be interesting to see. Now, what if we start to see inflation decreasing, interest rates lower, we should see a pullback on the ETFs. We should see a pullback on FTSE, and it'll be interesting to see. Very, very interesting times. So what we've got later on? Nothing actually later on, which is nice. Let me just take a look at it. And yeah, and we've had a little first look on FTSE 100, and we've had a little first look on crypto. So for me, my job is done here. I hope you guys enjoy it. I hope you guys enjoy this education as such, but we're learning together. We're learning together. We're learning these key things, and we'll start building on them as time goes on. So thank you so much. Make sure to give a subscribe and a like if you haven't already, and I'll see you guys in the next one. Peace out, guys. Adios. Adios.